the end. Over there, as usual, type in your chat box any questions. I'm going to review last week's entry now. For last week, there aren't really much entries, and if they were early Monday, early in the week, and then price kind of like stayed sideways until the non-farm payroll data came out. Okay. Right, so that's the first one first, right over here. Now, this is the euro dollar trade, and we were looking for the 1.078 to look for bearish price action. So it came to the 1.078 area right here, right? So what we saw was this, is that look at the way it broke price action, right? So this. Now, when you had the break of structure, the boss right over here, right? It broke it with very, very small candles. If it broke it and then it went on with like bigger candles leading toward that place, or this particular candle here is a longer one, then okay, it's fine. But what happened was that when it came near to this candles, it started delivering very, very small price actions like that. Now this sometimes, not sometimes, most of the times I would not be really interested to take it unless I feel that there is what do you call, I really need to take this trade, then I will look into it. Yes, I mean, if you would have taken it from there, and because of this, your next possible area for you to take the trade, right? To take the trade would probably be here. Well, not probably, it is here. This is one, and this is your second area. Now, regardless if you take it here or take it here, this would already give, if you risk $1, you would definitely make more than that. Actually, you make two. Okay, the entries here make two, and if you have a higher one, even you would have made 1 to 3. But the thing is that not every time you would see this kind you'd be so lucky as to get this thing, because it went up all the way here before pushing down that non-farm. That non-farm data was the one that gave you not non-farm, sorry. Later on for it to come down over here due to news. So if there weren't any news to do that, right, probably you would have been stocked out there. So we wouldn't know that, this could just come in. You see, there was a gap up here and then one push down, right? So I want you to look into this. I prefer something smooth like this, indication that it's a real clean breakout. So even this like that, but we are not talking, because this one did not break any structure over here. I would prefer to look for something clean. Then after that, then only you follow it up from there. Okay. So this is something crucial that I want you all to look at and understand as well before you take any trades. Now, there's also this particular entry right over here where you can see, because it did not break over here, then you would have taken that this swing low, 1, 2, 3 like that, right? And this one fulfilled because it's really long and it broke here. But I did not choose this one because this was not, it's not far away, put it that way. It's not far away, and since it's not far away, I would prefer it to break first than only go up and come down. But like as explained, I did not like the way that it's breaking over here. It's taking too much time. Yeah, this momentum could fizzle anytime. Now, the opposite would be the pound dollar. Pound dollar, we were looking at the 127 area to sell. And this actually went to the 1.27 area. Actually, just went 10.4 pips above it. So still within our sell zone limit. Now, this is what I mean, clean. But the thing is that this just went on too much in. If you see, this would have been your entry just above here. This is the 5-minute, right? So the most you would have made was, if you risk one right over here, you make 0.5. So and if you go to the 1 hour chart also, it's a huge candle. Basically, they have taken up a lot of the your what they call profits already, and you leave you something not that comfortable. At least if there's a one-to-one room to move, it's fine. It did not give. So anyway, I just brought this to highlight to you. I didn't make any entry last week. There wasn't anything in the pound dollar and the euro dollar as well. Both I did not take. And what I was doing is just managing the trades that I still have running from the week before in the Forex, as well as the trades, the stock trades that you've seen. That we talk about also in the report. Okay, so that's the two setup for the entire week. So now is the Q&A time, right? Okay, what you want to see? Aussie yen. Aussie yen. Let's go to Aussie yen. Wait, just give me a second. Aussie yen. Here you go. Okay, so wow. Okay, Leonard, what's my advice? Look here. Now, this is the liquidity, right? Now, this is definitely a very attractive liquidity. Right over here is taken off this liquidity, and it's also taken off this liquidity. Now, this is the important place now. This is a very very impulsive move. Now, but unfortunately, you are dealing with a yen pair. Now, if you see all yen pairs, they would look like this. Now, if you ask me which direction that I'm comfortable to trade, is this direction, down. I'm not looking into any other direction. So what you can do, my advice is that it has already taken off this liquidity. Go to the 15-minute chart, not the 5-minute chart, and then wait for it to take out everything. And whenever you have any opportunity, like I just give you an example, right? Now, look, this is down, this is up, this is down, right? So, and this down took out all this liquidity and it fulfilled, right? So clear so far? Now, if you look into the candle counting, this is 1, this is 2, this is 3. This is being the last one. So this area effectively would have been your entry, right? So this is your stop loss. This area right over here would have been your entry. And I would actually try to like look for sales. Now, what I don't want to is that when it comes down, so let's say I'm in this trade, I caught this trade, okay, just saw it at the point, and you caught it exactly because this is like the same, exactly the same point right over here. Then you have caught it because you left the order right over here. Yeah, it gave you, you're down. Now, if it comes down, break over here, what I don't want to see is a very fast pushback. I don't want to see that. Okay, because if this kind of price action tells us that, you know, the market is not ready, so the moment it breaks over here, what you could have done was that, hey, I'm going to watch this area, and if price comes back, hits, I'm going to get out. That should be your you know, what you have inside. And if you think that you can take some risk, then put your stop loss right up here, just sell it right up here, and just leave it and see what could happen next. But if you want to actively manage it, I would look it into this way, especially when it breaks over here. When it comes back, it shouldn't just move like that, especially in just one candle. This is not a good thing. So I'll be looking into this time frame, M5, M15, to tackle this going forward. So what about the next one? What should I do next, right? Now, this is definitely another liquidity area. Let this guy take out, see this, look for this pattern again, repeat this whole process. This is what I would do to trade the Aussie yen going forward right over here. Okay, so this is hopefully that I've answered your question on that. Okay, so any more questions, anyone? Leonard, if you don't understand, you can continue to ask, but if everything is okay, yeah, that's it. Okay, no problem. You are very, very welcome. So I guess there are no more questions. Yeah, I'll save this video over here and I'll send it to you in a short while. Okay. So have a wonderful holiday, whatever left of it today, and have a wonderful trading week. Take care and talk to you all soon. Bye.